Or maybe the plan is to go ahead and reinstitute, gold into the system, as Judy Sheldon, who I had the pleasure of interviewing pretty early on after her book was published on putting gold back into the debt-based system using gold-based bond on the long end. So there's lots of things out there. It's just I don't want to see, I don't like to use the word chaos, but disarray or uncertainty. Markets hate uncertainty, and that's why you're seeing the run to gold. Well, a lot of things, Steve, but I'll boil it down to kind of what you implied here. First of all, did I expect to see, $66 silver, by the end of the year 2025? And the answer is no. I just had this conversation with one of the people that's part of the Morgan Report team, Ted Butler, which Ted Butler is a famous name from the original Ted Butler. And Ted Butler from the UK, who's worked for me for a few years now, asked me that. And the answer I'm just repeating, said, no, I thought, I was right and wrong is what I told him. I said, once we hit the 50 level, we'd probably back off of it and sputter around that 50 mark up and down a bit. And once we went through it for the last, and I think final time, 50 would become support rather than resistance, and then up and away. Having said up and away, I didn't expect it to hit 66 this quickly. I thought we'd probably get up to maybe the high 50s, low 60s and build a base, for 3 or 4 months kind of thing. But obviously that's not what's happened. But as far as where we want to go, I'm really strong on this one, Steve. So thanks for the opening and giving me the ability to start this conversation where I want to start it. I want to start it on the demand side. And I want to start on the demand side for what's called insatiable demand. And of course, insatiable means it cannot be satisfied. So what does Mr. Morgan, the quote unquote silver guru, mean? And what I mean is, if I'm Tesla or I'm Apple Computer or I'm Samsung, which is the big buzzword now around industrial users, I have an insatiable demand for silver because for my end product, be it electronics, mostly for Samsung, there's so little silver in that cell phone or that flat screen or that membrane keyboard or whatever that it's immaterial to the final cost of my end product. So if I've got $10 worth of silver in a $1,000 cell phone, if silver goes up tenfold and it's $100, maybe that has some effect, but it's really small, and I'd probably pass it on to the consumer anyway. So it's price inelastic, as I've said so many times. But insatiable is, I'm not worried about how much the price of silver is, which of course the stackers are, and I am personally. I'm concerned with what the value is relative to not only the US dollar, really more how many barrels of oil or how much wheat or whatever it buys. But back on point, if I'm Samsung, I'm going to look at what do I need to stay in business. If the market's that tight, what do I need? Call Steve. Steve's head of logistics. He handles everything. He's been with me 10 years. Steve, how much silver do we use in a year for all of our requirements that need silver? Our 100 products that use it. Well, Dave, we use 20 million ounces a year. How much have we got warehouse, Steve? Well, we don't have any. We're just in time inventory. I get it for you every month. All right, here's what I want you to do. I want you to buy me that year's supply times 2. I need you to buy 40 million ounces. I want it warehoused near our main plant, and I want to hire 2 security guards to watch it 24/7 because I don't want to run out. So now you go out there, you do it, you call me back, 2 weeks later, I got it secured. The last load just got stacked, inventoried, bailment, you verify it's pure silver and all that stuff. And everybody's happy at Samsung because now we're on our way to at least have 2 years. But I don't care about the price. I care about being in business. Well, once I do that, what's to prevent Tesla from taking the same type of an attitude, saying, you know what, we need to be sure that we have enough silver going forward. So you could have an above ground stockpile that's X amount that, let's say, is, I don't know, make up a good number, 3 years worth of silver above ground. Okay. But in the scenario I just outlined, Tesla, Samsung, 3M, Apple Computer, whomever, all, there's 10 of them, let's say, that do exactly what I said. Now it's the same stockpile, but it's in much stronger hands. They're saying, I'm not selling, because if I sell it, what am I selling? I'm cutting my own nose off. I'm out of business if I sell. Yeah, but it tripled overnight. I don't care if it tripled overnight. I don't care. I need that silver or I'm out of business. So that's sort of what I want to put out there on the demand side, because a lot of people have been talking about the supply side. And there was an interview with Eric Young and Darius, I believe his name was, someone else, my friend Tom Broderick's recently. I listened to it, another one of my many insomnia nights, and they were addressing the demand side, probably not as specifically as I just did. So give me some feedback, Steve. What do you think about that type of scenario where same style, same pile of silver, but now who holds that silver is, let's say, hodling, because if they sell it, they're cutting themselves off. They're out of business.
The real engine of today's silver market isn't speculation, it's necessity. For global manufacturers, silver is not an investment asset, it's a production input. In electronics, energy systems, and advanced manufacturing, silver represents a tiny fraction of total product cost, making demand largely immune to price increases. When a material is essential and irreplaceable, price becomes secondary to availability. This creates what economists call inelastic demand. Corporations don't ask how expensive silver is. They ask whether they can secure enough of it to stay in business.
Yeah, well stated. It's really such an interesting market. I mean, it always has been, particularly these last few months, because retail is selling back. I mean, I deal with almost all aspects of this market, from, investment bankers and major miners to, penny silver companies that are exploring to, really big funds that buy. Anyway, I'm trying to build the case that a lot of retail is selling back. And so, markets strive for equilibrium. So if the demand is mostly on the industrial side, as I outlined, but retail is willing to get that price above 50, because after all, some people waited forever to get back to 30, and then it hit 35, and then it really accelerated, as you mentioned. Hey, I've got a profit, I'm taking a partial profit. And you can't blame them. I mean, to each their own as far as how high they think the price will go. But the wholesalers are sitting on inventory. And a lot of that 100-ounce silver bars can be easily, melted and poured to 1,000-ounce bars. It doesn't take much of a genius to throw 10 100-ounce bars in the pot, smelt it, and pour it into a 1,000-ounce mold. And so the refiners are really working for the commercial product. Where does that get satisfied? I don't know. Or better yet, will it be satisfied? Now, that may be a stretch, but it may not be. I'm trying to be objective here, Steve. I mean, once Samsung says, look, all I need is, 2 years supply, and then, he's talked to his chief scientist and they say, look, this new battery that's going to be out in 2 years, we think by the time it's in commercial capacity, we'll be able to thrift it, which is a fancy word for using less silver and still getting the same output by, 70%. So that 2 years that I'm hoarding for business purposes may turn into 5 years, because the technology's improved. And I'm really not sweating it as CEO, because I know that one of these big breakthroughs that's going to help our bottom line and make Samsung more of a household name than ever is going to, not only benefit the business, benefit our cash flow, but also not be as dependent on silver as it was from the pilot stage. So that's just an example.
As supply tightens, companies begin to think defensively. Instead of relying on just-in-time delivery, industrial users may secure years' worth of silver in advance. Once stockpiled, that silver effectively disappears from the open market. It's no longer available to be traded, sold, or recycled without risking production shutdowns. This shifts silver from weak, price-sensitive hands into strong hands that refuse to sell under almost any circumstance. The total amount of silver above ground may not change, but who controls it does, and that alters market dynamics profoundly.
revivifying the fundamentals. I mean, look, it's a fundamental fact, and there's always someone new or someone that like didn't get it. That sounds about right. Now you just hit them so hard, it's like they got it to their innermost being. Like, honestly, I don't have silver, I don't have gold. I am getting it now. So it's always good to reemphasize the most important part. So thank you for that. I look at it like one part of what you said is so all it was true, but one part I think to emphasize is they don't want to see a deflation. And so the only way out of that is to print more. But if you print more, it becomes worth less and worth less. And when does it become worthless in the psyche? And that's what they face. And believe it or not, if you study the Weimar Republic, I'm not saying you didn't, Steve, the cry all the way up was there's not enough money. Well, there was enough money. It's just the value was depreciating so quickly that people felt I don't have enough because I can't buy my groceries. And I'm not saying we're going to get to a Weimar type of hyperinflationary blow off. But what I am saying is you saw silver double in a year. You saw the gold silver ratio go from over 100 to 65 today. This is an acceleration phase. Usually they don't last that long. I mean, a lot of my peer group says, well, we got a 10-year bull market in the metals again. We might fundamentally, but I think monetarily we don't, because where does the real money fit into the reset, into the new system? What happens if this gets so out of control that the bankers lose control? I'm not saying they will. Bankers seldom lose. I want to put that on the record. But nonetheless, people have that instinct to survive, not only from any thought experiment you want to do, but I contend they have a financial survival instinct. And if you're watching your neighbor, and what's silver at in Canadian dollars today? $90?
Interestingly, as prices rise, retail investors often sell, locking in profits after long periods of waiting. This selling creates the illusion of balance, but much of that metal doesn't return to circulation. Instead, refiners and wholesalers redirect it toward industrial use, melting smaller bars into commercial formats. Retail supply temporarily relieves pressure, but industrial demand quietly absorbs it. Markets seek equilibrium, yet when long-term users accumulate and refuse to resell, equilibrium becomes fragile. The surface may appear calm, while tension builds underneath.
Anyway, the point is that more and more people are waking up, and that just adds to really more buying pressure and also a little more fear. I hate to use the word fear, but it's true. If you fear that your paycheck is not going to buy everything it used to, then you start to worry. What do I do? What do I do differently? Well, what's different is I don't have my Canadian dollar savings account. I take most of that and I put it into, gold and silver. And is it too late? And the answer is, I doubt it. But what point, there's just, where do we end? And I really don't know. And what price is it? I don't know. Where I am differing from most of my peer group is I do really believe that we don't have a big time frame left. I think with the European Union having the disarray that they have and the uncertainty in their financial system, all this war effort throughout the world, that we're getting closure on something getting much worse quickly. And I hate to use the word reset again, but a determination of how are we going to move forward in the new financial system, the new banking system, the proposed CBDC, or maybe the plan is to go ahead and reinstitute, gold into the system, as Judy Sheldon, who I had the pleasure of interviewing pretty early on after her book was published on putting gold back into the debt-based system using gold-based bond on the long end. So there's lots of things out there. It's just, I don't want to see, I don't like to even use the word chaos, but disarray or uncertainty. Markets hate uncertainty. And that's why you're seeing the run to gold, is because that's what's certain. When everything else fails, gold doesn't. Gold's a winner. Gold lasts. Gold works. Gold purchases stuff. Gold is trusted. All of that. So I don't want to sound like a doomer. I don't want to sound inaccurate, but I am concerned because of what the market is telling me, not what I'm telling you. The market's saying, hey, the gold silver ratio went from 100 to 65 pretty quickly. We haven't seen silver double in a year since the 79.80 last leg of that bull market that took years. So I'm not saying we're at the end of it, but we're closer to the end than the beginning. I can tell you that.
Beyond supply and demand, silver's behavior reflects growing monetary strain. Rapid currency expansion, persistent inflation concerns, and declining trust in financial systems push people toward tangible assets. History shows that when metals accelerate sharply, it often signals late-cycle stress rather than early optimism. The gold-silver ratio compressing quickly reinforces this message. These phases rarely last long. They resolve through correction, reset, or systemic change. The challenge is timing. Markets don't announce turning points. They whisper them through volatility.
It's a bit of a mess, to put it in polite terms, and it doesn't look like there's any real solution. Problematically, if you look from history or monetary history, what happens? Look at what happened in Weimar Republic. Basically, the currency failed, and then a super authoritarian came in and righted the wrong, so to speak, and Hitler came to power and rebuilt Germany from absolute chaos, really, into a war machine that was threatening world domination at one point in time. I'm not saying that's an exact repeat, but what I am saying is that history proves over and over that when the monetary system gets in such disarray, people will cry out for anything or anyone with a solution. And that's scary because you might pick the wrong leader or the wrong philosophy to move your country forward. Or in this case, it might be the world, because, the biggest, I'll say fear, because it's true, that I had from the get-go when I came, onto the web and started, talking about, macro picture and precious metals, was this is the first time that the dollar was pervasive through the world. It was the reserve currency of the world. So if the dollar failed, like all their fiat failed, it wouldn't be a US of A problem, it'd be a world problem. Well, how do you get out of that one? Well, you go into a new world order with the central bank digital currency, and you put everybody on the dole, and everybody says, yes, sir, 3 bags full, and your whole lives are basically dictated to you on what to think, do, and say, and your freedoms are gone. I mean, that sounds extreme, but that seems to be the trend. I asked Mike Lorenzo, the chief at the Silver Institute, and I've known him for years, basically from the get-go, meaning from the time I started my original website, to go through what happened in 2025 on the silver, and then what the projection is for 2026. And he bowed out. I might get him back next year. But on our conversation, he just said those 2 letters, AI. So what do you see as the biggest demand going forward? Because people don't understand how much AI is going to play into this. So I took that to mean 2 things. Not only how much is it going to affect our lives, but how much silver it's going to take for these data centers.
Looking forward, the next demand wave may come from artificial intelligence and data infrastructure. AI data centers, renewable energy grids, advanced batteries, and high-efficiency electronics all rely heavily on silver's unmatched conductivity. Unlike past cycles, this demand is structural and global. Even if technology reduces silver usage per unit, total consumption may still rise as deployment scales exponentially. Combined with geopolitical uncertainty and monetary experimentation, silver sits at the crossroads of technology, energy, and finance, a position that few assets in history have occupied simultaneously.